It's time for the Trading Stocks Made Easy podcast. Each week, Trading Stocks Made Easy demystifies stock trading and investing so you can profit big. And now, here's the host of Trading Stocks Made Easy, the wealthy investor, Tyrone Jackson.
And welcome back. It's Tyrone Jackson, the wealthy investor. And thank you for joining me for another episode of Trading Stocks Made Easy. You know, I was thinking this week about risk. Now, if you're an investor in the stock market like me, like you, we put our money into stocks and we essentially hope that they go higher, right? But really, we're not hoping that they go higher. We're hoping that they innovate and make new things that they can sell. That means products and services and generate billions of dollars. Now, being a business owner myself, I know that, well, I take a lot of risk. Right? So sometimes I do things at my company and I know that I'm sort of kind of risking something, but I want to see if the public likes it or I have a new idea or something I think will help people. And guess what? We're not always successful, even though our core business is. Well, when you think about that, anything that comes in our world that's bright, brilliant, and smart had some risk behind it. Someone at a publicly traded company had to say, I believe in this idea, and I believe that there is a market for it. And I believe that this will help drive our sales higher. Well, today's show is called Corporate Hits and Misses because sometimes your favorite companies venture in another area, and guess what? Nothing happens at all. So you can't ride off a company's name value. Now, I want to get into 4 stocks here that had both some hits and misses, but you may think of them as exclusively successful. Not true at all. They knocked on a lot of doors, bought smaller companies, and it just didn't work out. And more often than not, it actually does. Now, just before I get into today's lesson, I want to remind you of something. The power of your mindset. The power of your money beliefs. All of the money that you will earn in your entire lifetime is based on what you believe to be true. Where do we get our money beliefs from? Well, usually our primary caregivers. And for a lot of us, that means good old-fashioned mom and dad and that nuclear family. If your mom and dad share the same ideas about working for a living, right, and being on the hamster wheel, living paycheck to paycheck, you can't help but to inherit those thoughts. However, if your parents say someday you're going to own a business and you're going to make millions of dollars and help change the world, those thoughts are going to govern the choices that you make in your life. Right? So if you don't want to live a life where you're trading time for dollars or have a job which stands for just above broke, you probably want to develop some positive financial habits. And that is what this show is all about. Learning how to invest money and learning how to trade in the stock market so you can cash in on all this innovation, be in step with the times as an investor. Okay? So as I nudge you forward, hopefully I shake awake your consciousness so you begin to make the connection between stocks that go higher and where we are in the world of technology right now. Now, I do want to say something because yesterday Apple released their fourth quarter earnings. And, you know, in this program, we do everything by top line revenue, right? Your top line revenue is like a company's gross income. And as long as that top line revenue is growing, the stock price tends to follow suit. That's investing 101. However, if that top line revenue starts to contract or decline, or in layman's terms, just starts falling, the stock will generally fall as well. What struck me about Apple earnings in Q4 was there wasn't a lot of innovation, although there was revenue growth. In other words, their top line revenue, the money that they made on their gross, grew, and their net income after all expenses also grew. But it wasn't really because there was more innovation. In other words, the iPhone 15 was just released. What features are really new? Not a whole lot. And it's been over 12 years now since Steve Jobs passed away, and we're just not seeing the same kind of innovation there. We're seeing price increases, which will drive the stock price. We're seeing stocks buy back. The company's buying back more shares, therefore decreasing the float. But is Apple right now, from a financial point of view, the prettiest girl in the room? Well, not from an innovation point of view, but from a revenue point of view, the answer is yes. So not everything that glitters is gold in the stock market. A company can be really hot for 7 years, stop innovating, and Wall Street says, well, now we like you, but we're not going to push your stock price up 50% per year because innovation is slowed. So we're looking for innovation, those of us who are investors right now. And where is it going to come from? Well, I'll share that with you over the next 3 to 6 months as we learn about innovation. But right here in episode 222 of Trading Stocks Made Easy, I want to talk about corporate hits and misses. And one of the companies that's fascinated me over the 6 years, the last 6 years, I should say, is a company called Meta. Meta. You know them as Facebook. But remember, Facebook also owns Instagram. So when we start talking about things like corporate hits and misses, sometimes a company doesn't have to innovate on their own. They just need to buy a company that's in the process of innovation. And remember, not too long ago, Facebook bought Instagram, and Instagram is clearly a hit for Facebook. But I want to talk about one of their misses, which was the metaverse. Does anybody remember when Mark Zuckerberg said the metaverse is going to be the next big thing and you'll buy these glasses and we're all going to live there and we're going to spend more time in the metaverse than we did in reality? Did that actually happen? No. Does anybody really even remember the metaverse right now? No. Why? Because we're all on Instagram. Right? So sometimes a company can carve out a direction and it just doesn't go. Well, why is Instagram a hit? Well, it's a faster, younger version of Facebook and, dare I say, hipper version of Facebook. And it's known these days for what my friends call the highlight reel. Nobody posts on Instagram when they're sad, right? They post when something great is happening. Now we have Instagram models who seem to be traveling all over the world and living these fabulous lives. And the sad part about that is young girls, when they turn 21, they think they should be driving a Ferrari, have a rich boyfriend, and should be flying backwards and forwards in a private jet from New York to Hong Kong every other week. And reality just doesn't work that way. In reality, you actually need a job to begin to support yourself. And hopefully you take some of that money and you learn how to invest it so you're not trading time for dollars. But Instagram is misleading a lot of the younger generation by portraying life as easy and glamorous. But Instagram's revenue keeps growing exponentially. In fact, if you actually read the revenue statements on a quarterly basis, Instagram's revenue is growing faster than Facebook, right? So how does Instagram actually make money? From advertisers who pay to be in between posts in your feed and my feed. Okay? So the amount of advertisers and the amount that they're spending now on Instagram is greater than the amount that they're spending on Facebook. So the acquisition by Facebook or Meta of Instagram, really big hit. And how do we know that? We look at the stock price over a 5-year period. The ticker symbol has changed to Meta, by the way, for Facebook. But 5 years ago, these shares were trading around $190 a share. Where are they at the time of this recording? $314. So when you really think about what is Facebook, it's an advertising platform, right, that goes all over the world. So they got a hit with Instagram, but where did they get a loss? Now, I don't know if you remember this, but there was a time where Mark Zuckerberg wanted users on Facebook to be able to send money, almost like the old Western Union, to other users on Facebook, and they would take a small percentage of every dollar spent. And what did the U.S. Congress had to say to Mark Zuckerberg? Well, they hauled him before the Senate Finance Committee, and they gave him a lashing that I'm sure changed his life. Why? They were not going to let this guy suddenly become a bank. Could you imagine if $1 billion a day was transferred from one Facebook user to another, and Mark Zuckerberg got 2% of that? He would be growing one of the fastest growing financial institutions in the world unregulated. So when Maxine Waters had a shot to question him, he never forgot that day. And let me tell you something about being hauled before Congress. You never want that to happen. And you want to see a big transformation? Do you remember when Mark Zuckerberg used to wear the hoodie to every major event after he went before Congress? Suit and tie, baby. That's one billionaire who grew up in the public eye. So we like Facebook. We like Meta for the revenue that they generate via advertising. But the metaverse, didn't exactly work. And becoming Western Union, no, Congress was not going to let that happen, and the EU was not going to let that happen. That's too much power for one guy. Now, let's move on to another hit and miss scenario, which is Amazon.com. So I've talked about this before on the show. Remember, Amazon was actually started out selling books many, many moons ago. And Jeff Bezos got the brilliant ideas of we should be in other product categories, not just books. And now Amazon is essentially Walmart to the world, right? But Amazon wanted to get into streaming, and they decided to try streaming connected to Amazon Prime. They needed a reason to bill your credit card every single month and then give you huge discounts in the back end, right? Okay, so we think of Amazon shares as always being on top of the world. Yes, they're a member of the S&P 500. They've increased significantly. But where did Amazon miss? You ready for this? Because after I say this, someone's going to go, oh, that's right, they did try that. Whole Foods. Remember, Amazon bought Whole Foods and still owns it to this day. Did they revolutionize grocery and shopping? No, because the acquisition of Whole Foods, well, it hasn't exactly gone smoothly. Right? So they are generating revenue, but it didn't cause the stock price to go up 50, 60%, the acquisition of Whole Foods. In fact, it's easy to forget that those two brands have the same owner, right? Under one company. So not everything that these companies try hit big, but Amazon Prime did. Okay? And the streaming service is doing okay. But where did they excel? The cloud. Don't forget, Amazon's cloud hosts Netflix, Disney Plus, and a lot of other streaming services, and the prices to be hosted on that streaming services are not going down. So when you're actually watching, let's say, Disney Plus, it's on an Amazon platform called AWS, right? 5 years ago, Amazon shares was trading at $85.94. Where are they now? $138 a share. I expect these shares to go higher because Amazon is one of those companies that's going to be at the forefront of AI, and I think they have a few more acquisitions to make. Okay? So sometimes people say, oh, Tyrone, you're such a great stock picker. How did you become such a great stock picker? Well, really, I'm just following revenue and growth and where the revenue is coming in at a company like Amazon, right? So they're pushing themselves to always be on the forefront of innovation. And when you start watching where the revenue is coming from, you get pretty good at determining whether or not the stock price is going to go higher and by how much. Today, we're talking about corporate hits and misses, and your favorite publicly traded companies, they all miss, but what we remember them for are their hits. Back in a moment.
Want to increase your stock market trading profits? Then you need to start your monthly membership to WITradeschool.com right now. Don't understand how to write covered calls for monthly income? No problem. Simply review Tyrone's latest stock trades in our video library as many times as you need. WITradeschool.com is all about helping you get the financial education you need to earn money in the stock market and change your financial life. Tyrone Jackson, the wealthy investor, has helped his students earn thousands of dollars per month trading stocks online from home. These are people just like you. So what are you waiting for? Follow Tyrone Jackson's red-hot stock trades and investment strategies today. Don't wait. Start your monthly membership at WITradeschool.com right now.
Hey, it's Tyrone Jackson, and we're back with corporate hits and misses. Right before the commercial break, we were talking about Meta, and we were talking about Amazon. And not everything that a corporation attempts is always gold. It doesn't always turn into gold. And today I just want to give you a few more examples here. Okay, let's talk about, and you've heard me talk about Macy's, publicly traded company here. And I love Macy's. And I have to admit, I still shop, but I shop online. And the deals are just incredible, right? Now, Macy's seemed to never, ever be prepared for a changing world. When COVID hit and everybody was shopping online, Macy's was like, well, we'll do some stuff online, but ultimately when COVID is over, everybody's going to return to our stores. No, that didn't exactly happen. And that's why Macy's shares are down 50% over the past 5 years, because they didn't adapt to the new world order. Now, this is what's fascinating to me. Macy's had brand names, obviously, where you would go in and shop. And then they changed their business model where a company like Levi's couldn't just be on the second floor. Levi's had to rent the second floor like a tenant. It became a real estate play, right? Not only were they paying rent, they were also paying a percentage of the sales. So Macy's turned itself into a shopping mall, not so much for you and I, but for the brands, where the brands had to rent space and pay a percentage of the sales that came in. And then Macy's was supposed to promote the brand at their stores. But guess what? Consumer buying habits actually changed, because this is a little known secret. Amazon has a whole men's fashion division online. And because of Amazon Prime, they were able to kind of cash in and steal thunder from places like H&M, Macy's, because if they can get you those clothes within 2 or 3 days shipped directly to your home, and they're higher end garments, why wouldn't you just shop on Amazon for everything? So this is the part of the reason why Macy's stock is down 50%. They're hanging in there. I hope they never go out of business, but we don't know. We must watch that revenue. You know, we're in a world that is constantly changing, and technologies and apps are facilitating that change, right? So it's no longer the day where you can, let's say, buy AT&T stock because they're the phone company. There's no phone company anymore, right? So we have to pay attention to our investments, because the companies that are on top change the world. They take risks, but they don't always hit. Now, of all of the stocks that I talk about today on this show, this company fascinates me the most, because they were really on the edge with hits and misses. And this company is called Netflix, ticker symbol NFLX. Now, listen to this, because here's where the game gets interestinger and interestinger, as my little nieces and nephews say. Netflix, if you can remember, started as a company that would send you CDs in the mail. You'd watch them, you send them back, and then they would send you another round of CDs to watch, right? Its original competitor was Blockbuster Video. Remember the now famous story that Reed Hastings went into Blockbuster Video? He was 3 days late, and he goes, why am I paying all these late fees? I should just send people CDs and DVDs, let them watch it at home without any late fees, and just charge their credit cards. I know it's hard to remember that that's really where this company's origins are, but it really is the truth. And then someone at Netflix says, why don't we stop sending out DVDs and have people subscribe to these movies on something called streaming, where they would pay a few dollars, they'd be able to watch 1,000 movies, all for one monthly fee. And now Netflix almost single-handedly created streaming. Do you remember that? Right. And then we've got all these other services like Tubi, where you can go and watch well-known movies as well as independent productions. By the way, I have a couple of shows on Tubi. You should watch me. I interview some of my favorite celebrities. Shameless plug for my TV division over here. And we've got Disney Plus, and then we got Paramount, and then we got Peacock, and we got all these other services, which, by the way, are losing $500 million or more, because although everyone went to streaming to get their share of the market, Netflix is the dominant leader. And the revenues keep rising. Now, I'm going to tell you where that revenue is coming from. It's coming from you, because every single time they raise the price, you don't cancel. Do you remember Netflix used to be $6 a month? which was such a value. Now their top tier program is over $26 a month. They've just launched another division where you're going to watch ads for $6.50. But let me tell you something, as a longtime investor in the stock market, within 3 years, we'll all be paying $49 a month for Netflix for two reasons. They're the best in the business, they have the most original content, and we have no choice. Their service is that good that we're willing to pay $49.95, and most importantly, they need to please Wall Street. On Wall Street, it's all about top-line revenue growth. If you can't grow your revenue, your stock price is not going to grow. Now, I'm going to give you a little Tyrone Jackson Wealthy Investor secret here, okay? So get ready. There's going to be a lot of consolidation in streaming, and Netflix is going to buy up a number of these streaming services and combine subscriptions and essentially take over the streaming business. Why? Because most platforms can't afford the server fees. AWS, Microsoft has the best in the business, and the price to start a streaming service is going higher and higher and higher. Therefore, you just can't make your money off of subscriptions anymore. You have to make them off of ads. So ultimately, if we don't want to see any ads, we're going to pay $49.95 to Netflix, but all the other streaming services are going to be advertiser supported, because if they want to stick around, that's the only way to do it. So I predict, and we'll see if I'm right, in 3 years, there will really only be 2-3 major streaming services. And then after that, everybody else will kind of fall by the wayside, or we'll be watching YouTube. And isn't it funny that YouTube now has YouTube TV? So they're in the streaming business. And who owns YouTube? Google. Who acquired YouTube? Google, and then they changed their name to Alphabet. And that's what I mean by consolidation. I always say when I'm teaching stock market trading, the big fish on Wall Street always eat the little fish. That means they raise the money, and if you can't beat them, buy them. And that goes on all the time in the stock market. That is yet another way for you to create wealth, is to sit in the top names in the business, in the sector of the market that fascinates you the most, and just let them go to town when it comes to acquisitions. So not everything on Wall Street that glitters is always gold, but if you're with the market leaders, Visa, MasterCard in the credit card processing space, Netflix in the streaming space, they will always do well because they will have the money to acquire the names that are innovating if they're not innovating themselves. Something to think about. Remember, it is your consciousness and financial education that contributes to your wealth in the stock market. And every week, I'm happy to be your guide. I'll see you next week right here on Trading Stocks Made Easy. If this episode was helpful to you, make sure you share it on social media. I'll see you there. Take care.
You've been listening to the Trading Stocks Made Easy podcast. Be sure to rate and review our show on iTunes. While you're on iTunes, be sure to click the subscribe button and you'll automatically receive our next episode.